There have been a few months in a row of better than expected inflation.
I love the fact that you are so enthusiastic. It's getting everybody pumped up this morning for this. There have been, Matt's right, we could see a better than expected number this morning. When you look at some of the underlying numbers that we've had recently, including the ISMs for both manufacturing and even services, although the services headline number went down, the prices paid number went down significantly, and it is beginning to look like inflation is rolling over. Do we see that reflected in the numbers? I don't know, but the smarter people than me, the economists surveyed by Bloomberg, think so. We will have the first negative print on headline, the Bloomberg survey says, since May of 2020 in the height of the pandemic. The core goes up a little bit, but both of them on a year-over-year basis drop. And that drop is less important to the Fed than those monthly changes because they want to see the sequential movement. And as Matt mentioned, we have had 2 months in a row where they have come in lower than anticipated, and that could certainly have an effect on the markets. The big thing, of course, we're watching, Matt and Anna, is the core services ex housing. That's sort of a made-up number by Jay Powell because the core services is where we have seen inflationary pressures. A lot of it comes from housing, but the Fed already knows that housing prices, rents are going down. They're just not reflected in the index yet. So Jay Powell said he's following this index, and you know that means everybody on global Wall Street is following this index.
Mike, just to make the point, so we're looking at for moderation, as you set out, in at least 3 of the 4 measures of inflation that we're going to be glued to on the Bloomberg terminal. So looking for those to moderate. And when we talk about better inflation, we're in a world where better means lower, of course, to try and bring it back down to where the Fed wants it to be. What is at stake in terms of expectations for the Fed then in February and the month after from this data print today?
Well, there's certainly a divergence between what the Fed says it wants to do and what the market thinks the Fed is going to do. There's general consensus they will raise rates at least one more time. The question's been 50 or 25 basis points, and if we get a print as expected today, you're probably going to see a 25. And then the real guessing is going to begin. What do they do when they get to the March meeting? Do they stop altogether, or do they still raise rates again? And then, of course, you'll have me on to talk about whether the Fed is going to be starting to cut rates anytime in 2023. At this point, they're arguing against that.